Joining us now is Scott Shelley, Senior Vice President with TJM Investments. Scott, thanks for joining us this morning.
Good morning.
Hey, we will start with the grain markets. Wheat looks good, soybeans look good, corn looks good, even talk of potentially a record-breaking sugar beet crop. All sounds good. What are you seeing in terms of how that's affecting the market?
Well, we've been really quiet after last Wednesday's shocker. It really caught the trade wrong-footed, and I think we've still got a few people in their bunkers because the volumes have been terribly, terribly low and thin, and the volatility has been really kind of eking up there. So there's nervousness in the market. We don't have a ton of trade. But I'll say this, we're in the middle of getting a drink of water right now with some good weather moving through the Midwest, and that's probably exactly what, if anything, both corn and beans needed. So with what's happening in the rest of the world, with the commodity prices hitting 5-year cycle lows, 13-year lows in oil, with the weather coming through as it is, and with the report that we got last Wednesday, it doesn't look too good for, grain bulls at this moment in time. So I know things can change, but I did a very long trip myself from northwest Indiana to northeast Iowa, and I got to say, I think things look better than I've seen them look in a long time.
As we head through the next few weeks, the next few months, how do you see the market adjusting or reacting to what we are seeing right now?
Well, we're going to be, obviously, in August will be more of a bean market for corn, weather market for beans than corn. But we can't ignore what's been happening globally around us, So the U.S. is 25% of the world's GDP. Asian emerging markets are 40%. So watch what happens to that dollar. I keep telling folks that's going to have an impact. When we start to see it impact our exports and start to hurt our U.S. companies, that'll also weigh on prices. So number one, obviously, we'll still be in a weather market here. But number two, we're going to have to watch what the international flow of money does.
All right, we're getting ready to wrap up August here in a couple of weeks. The barbecue season wrapping up. How are the livestock markets looking?
They look pretty good. I mean, we had hogs on a four-day rally here. I think the charts and things look good technically for both feeder and live cattle. We just haven't really solved our problem in either one of those arenas when it comes to, the West, and you've got the wildfires that are taking place now. There's still a lot of stress and heat out there. So I think that those things will probably hold in there, and they're bucking the trend as of right now with obviously the dollar being stronger. The dollar is again stronger today, and we've got oil off today. But feeder cattle, live cattle, and hogs looks to hold in.
You've got a lot of talk on the Twitter and the Facebook and whatnot about the El Nino. Does that enter into the equation in terms of the markets?
Yes, at some point it does. It's something to talk about. I guess that's good. But really, right now, it's going to be the weather that's in our face. And like I said, we've got some good patterns going through the Midwest as I speak. I can hear them outside. Number two is the dollar. Those are going to be the two things that are going to really drive things over the next 6 weeks.
All right, sounds good. We are out of time. Scott, thanks for joining us this morning.
All right, good luck today.
Thanks. Take care. All right, once again, that was Scott Shelley, Senior Vice President with TJM Investments. Stay with us. We'll have one last look at your weather right after this, as well as a sneak peek at what's coming up on the Valley today.